There are a few different pros and cons for personal and purchasing in a trust, so it's important to understand those differences and speak to an advisor or an accountant to give you advice on which is going to be the best entity to purchase it in for yourself. When you're purchasing property in your own personal name, it's a little bit easier when it comes to the lending, and you also get some taxation benefits. If it's an investment property and you're renting it out, you'll get some negative gearing benefits and taxation benefits. When you are purchasing property through a trust, there's welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services, and over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Hey guys, just a quick disclaimer and just a reminder that this is not personal advice, so make sure you speak with a licensed advisor before making any investment decision. Hi, and welcome to this edition of SMSF Insider, where we'll be talking about purchasing property in your personal name versus purchasing property in a trust. So when you're purchasing property in your own personal name, it's probably a little bit easier when it comes to the lending. However, and you also get some taxation benefits if it's an investment property and you're renting it out. You'll get some negative gearing benefits and taxation benefits. But there is very little asset protection when it comes to purchasing in your own personal name. So that's something you need to be mindful of versus purchasing in a trust, where you'll get a little bit more asset protection, and but it is a little bit harder to when you're getting some lending with a trust. You need to provide more information to the lender. Not saying it's difficult, but certainly a little bit more difficult than purchasing in your own name. You'll get a little bit of asset protection, as I mentioned, and you'll also receive the CGT or capital gains tax 50% discount, which should apply, if it's set up correctly, should apply to both purchasing property in your own personal name and in a trust. And how that works is, let's say, for example, you've held the property for longer than 12 months and the capital gain on that property is, let's say, $100,000. That capital gains tax gets reduced, the portion gets reduced from 100,000 to 50,000, and you're only getting taxed on the 50,000 as opposed to 100,000. So that's when people are talking about a 50% CGT or capital gains tax discount, that's what that is. If you've held the property or the asset for longer than 12 months, you will receive a 50% discount. So that's what people are referring to when they're talking about the 50% CGT discount. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. Hey guys, just a quick disclaimer and just a reminder that this is not personal advice, so make sure you speak with a licensed advisor before making any investment decision. Also, the tax income that's derived from a property that's purchased in your own name will be then taxed at your marginal tax rate, as opposed to if you're purchasing the property in a trust, then the income can be distributed to whoever the beneficiaries are of that trust. So if it's a discretionary trust, you can decide how that income is distributed. You can distribute it to someone that's on a lower tax bracket, as opposed to your own personal name, which tax rate can be up to 45 cents in the dollar. So there are a few different pros and cons for personal and purchasing in a trust. So it's important to understand those differences and speak to an advisor or an accountant to give you advice on which is going to be the best entity to purchase it in for yourself. Thirdly, there is you can also purchase property in the name of your self-managed super fund, and there are some tax benefits in doing that, which is main one being the property being taxed at 10% after the capital gains tax, 10% after you've held the property for longer than 12 months, and zero capital gains tax when you've held the the property right the way through to retirement. So huge tax incentives for purchasing assets through your super fund and your SMSF specifically. Again, speak to your advisor or accountant around which entity to purchase your assets in before making any investment decisions. Thanks for tuning in to SMSF Insider, and drop a comment in the comment section below if you'd like us to talk about a specific topic in one of the upcoming episodes. Thanks for tuning in to SMSF Insider. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF, or book a call with our team to see if we can help you.